So our next panel today, kicking off in just a moment, is being led by Mostafa Al-Mashita, and it'll be covering digital asset exposure through mining. Mostafa is going to be engaging in a conversation around digital asset miners and financiers on how mining is an effective way to gain exposure to the digital asset ecosystem and digital assets as a whole. To give you guys some background on Mostafa, Mostafa has been leading the sales and trading arm of the GDA group of companies for about 4 years now, under Secure Digital Markets as the head of sales and trading. Prior to his experience in the digital asset space, Mostafa spent a lot of time involved in various entrepreneurial ventures, scaling several different companies, as well as actively being involved in charity. Through his time at SDM, Mostafa has helped facilitate several $1 billion of digital asset liquidity and transactions, and also helped regularly with miners on their infrastructure and capitalization. Mostafa is also one of the principals in our internal mining fund, Printing Capital, which invests in cutting-edge mining projects that span the digital asset space. So Mostafa, I'll let you take it away. Scott, Chase, Whit, nice to see you guys. I'll be here in the background. Enjoy.
Thank you, Zach. Gentlemen, well, pleasure to have you. Chase, first of all, I love that background. That is fantastic. So I'd love to give a bit of a background on everybody here. We'll start with Whit. Whit is the co-founder and CEO of Compass Mining. Whit became fascinated with Bitcoin mining in 2018. He started the Hash Rate podcast to learn from industry leaders and grew the show to become the #1 Bitcoin mining podcast on both Spotify and iTunes in 2020. Hash Rate podcast was recognized as one of the top 20 crypto podcasts. In 2020, he co-founded Compass Mining with Paul Gosker and Thomas Heller to democratize hash rate by giving everybody the ability to profitably mine Bitcoin. Compass is the first Bitcoin mining marketplace and has helped hundreds of first-time miners start operations of their own. Prior to founding Compass Mining, Whit held leadership positions within Hilton Hotels, Alliant Payment Systems, and PuppySpot.com. Welcome, Whit. Scot Johnson. Scot Johnson is the founder and president of Digital Shovel. Scot Johnson is the founder and lead designer at Digital Shovel, a company focused on building innovative ventilation, electrical distribution equipment, and containers specifically catered to the cryptocurrency mining industry. Starting as an Ethereum miner in late 2016, Scot dove in headfirst, first converting a room in his home into a mining farm, followed by the creation of an industrial unit, and then finally landing in containers where he formed Digital Shovel. Over the past 2 years, he and his team rapidly worked their way to becoming one of the leaders in the crypto mining container space. Welcome, Scott.
Thanks for having me.
Last but not least, we have Chase Blackmon. Chase is has brokered multi-million-dollar mining infrastructure deals, has built partnerships and meaningful relationships with executives of hardware manufacturers, and has advised multi-billion-dollar private equity funds on how to get involved in Bitcoin mining. Using his firsthand experience, Chase has helped create their own fund investment thesis of becoming the lowest cost producer in Bitcoin mining. This thesis, alongside the intellectual property created from his partners, Cameron, Nathan, and Nick of Emergent Systems, has allowed Chase to become and his business partners to fully subscribe multi-million-dollar rounds into the private equity groups that they have created. Welcome, Chase. So, gentlemen,
I'm glad somebody caught the background reference. I showed a couple of guys at the office today, and they're like, "What is that?"
It's Michael Saylor, right?
Yeah. I was like, "Do you even crypto? Come on, man!"
Fantastic! It's an iconic background. So, gentlemen, I want to go first with Whit, and then moving on to Chase and Scott. I want to ask you, what is the biggest industry shift related to mining that you've seen in the last 3 to 6 months?
I think the biggest industry shift that we're seeing in mining over the last 3 to 6 months is really the creativity with which people are sourcing hardware. Right. This time last year, it was a much different game when it comes to where you could get your hardware, who you were buying it from. But now you have MicroBT basically sold out until the end of this year, locking in large contracts already through 2022. and Bitmain rolling out their VIP program a couple of weeks ago, basically solidifying their large orders through 2022 as well. So it's a shifting landscape, and with the shortages at the chip level, we're seeing that that's really constraining the flow of hardware to new and existing miners.
Thank you, Scott.
Yeah, I definitely echo what Whit said. It seems to be the case. Well, it's always the case every time we have a bull run, but more so with the institutional stepping in and just, you know, leagues and leagues above in terms of size what any orders were. I mean, we're seeing orders now that, you know, a single order is constituting the entire, you know, year's purchase of what a previous bull run might have seen. From our side, kind of seeing with tunnel vision in terms of obviously some of the stuff we're pushing out, we're seeing in terms of deployment, a lot more moves to smart automation within data centers, so completely autonomous, sort of having to physically put the units in there. And also much more widespread adoption of stranded gas plays. There's lots of guys that were doing it, but you're seeing it just, it's becoming the norm in the oil field and fully accepted. Before it was, you know, those wacky Bitcoin guys doing something with natural gas, and now it's just, I don't think there's a major natural gas producer that is unfamiliar with the, you know, the digital pipeline to BTC model, and you're seeing it not just on the mom and pop side, but definitely on the larger, more institutional guys as well.
For sure. Yeah, I could second both those points. I mean, it seems like the oil field is really starting to grasp what they could be gaining, you know, whether it's from the regulatory side of not getting so charged from the EPA with a bunch of fines and whatnot, but also just from like the revenue generation of these basically sunk assets that they have in the oil field that are not really netting them anything. If anything, they're losing money on most of them. So, you know, the work the guys have done out there, it's taken years for these oil and gas guys to kind of come around. But after they've gotten a couple of use cases to kind of show, it seems like they're coming around. But yeah, I would say the only other thing that I've seen kind of going on is that, you know, traditionally miners try to build the cheapest infrastructure they possibly can to get up and running. And that has lots of positives and also a ton of negatives. I would say that with the increase interest from like the institutional players and just like the abundance of capital that's coming into the market, the quality of the build outs is it's improving, right? So there's more automation, there's higher quality components, et cetera, like at the infrastructure level.
Fantastic. Wanted to ask you guys regarding the decentralization of hash rate. There's a lot of talks about, you know, where hash rate's currently centralized around. I believe the last figure that I looked at was 60% localized in China. You know, what are your thoughts on the decentralization of hash rate? You know, Whit specifically, I know that is a primary goal of your of Compass Mining, to decentralize and allow people, no matter how big or small, to participate in the mining industry. Want to get your thoughts on that? Is there a risk to the network as a whole if there's a centralization of hash rate in one specific jurisdiction, or do you think that we are moving in an era where there's prominent miners and machines and farms popping up all around the world to tackle that?
Yeah, I mean, so to your first point, yes, if there was centralization of hash rate, specifically if, you know, a handful of people controlled the majority of Bitcoin's hash rate, that would pose a threat to the network. We are seeing more and more decentralization, and, you know, the diaspora out of China is happening. China will likely always have a majority of the network hash rate as long as the ASIC supply chain is based, you know, there, because they have access, right? Access to those machines makes it much easier for them to get stood up. And I think in China right now, you can stand up a pretty sizable facility in a fraction of the time that it takes to get stood up anywhere else. So that also gives them an edge. To that point, though, right now, aside from just the decentralization, the ability for everyone to now mine Bitcoin is creating more strength and stability in the network. You know, we've seen over the past 6 months since we've launched Compass, there is a big desire for people who have never had exposure to mining before to want to gain that exposure, whether it's an individual or a small fund or a family office. Everyone is looking to further secure their investment in Bitcoin by gaining some exposure to the underlying infrastructure. And it's now easier than ever to get started. And that is going to further decentralize the network, but also really spread it around to more people. Because if you're looking at decentralization, and let's say you've got large players in China, large players in the United States, large players in Canada, it's still just a few people controlling the majority of the hash rate, no matter which country they're in. But as you're spreading that out and you're getting more small funds and family offices and individuals involved, now you have more people on the network, more miners on the network, which is adding that extra layer of security.
Great. Gents, do you want to comment on that? Scott, Chase?
Yeah, definitely. I agree. We definitely need to decentralize where the hash rate is. But I mean, I think the larger problem at hand is, there's 4 pools that make up 61% of the network hash rate. So it doesn't matter where you put the hash rate. If you're financially incentivized to go to the largest pool, you've got the highest chance of, mining in a block there. Going to the smaller ones is, akin to kind of playing, the old day lottery mining, which was fun once upon a time, not so much anymore. But until we start to tackle that problem, you're still going to have the centralization. I mean, you're still going to have, Antpool and BTC.com doing incentivized deals where, they are basically just turning their fees over to the local Chinese miners to maintain that market share. And as a result, it attracts all of the other miners from North America where they're actually making their money and they're charging the higher fees. Not that that's a solution for the problem, but I mean, I think that's the bigger problem at hand rather than where the hash rate physically is.
That's a really good point. I would certainly love for the next great American mining pool to emerge, and everybody hop on board in the U.S. and start mining there. That would be I don't know. I think it'd be really good for the decentralization of the hash rate. There are some guys who are working on it. I know the Luxor dudes have been up to a lot of good things. So props to them. But it seems to me at least that the physical distribution of hash rate across the world seems to be continuing to span the globe, but also kind of concentrate in a way to where in the hands of some of the larger players. There's some folks in Australia, Kazakhstan, in Dubai. I mean, that there's opportunities in a lot of different places that people are starting to, or have been, exploiting, and that they're starting to really build up their little Bitcoin mining empire there. But I mean, Scott, it's a really good point. It doesn't really matter where it is on the globe, as long as it's still pointed to the same pool. It's still under the somebody else's control. So yeah.
I guess some of the nice thing of seeing some of the really large projects that are coming to North America, some which, frankly are above single size, are potentially going to be above single size projects in China. Hopefully we'll get to a point where we can get a level of organization where, those large players here in North America will start to realize, there's a value add, not just on the direct financial incentive, but just merely bringing stability and diversification to the network in terms of how things are distributed. And I mean, I think we're a ways off from getting there, but we're at least going down that pathway.
Kind of reminds me of something we did at one of the previous industries my family was in. We kind of had a similar market situation going on, and we formed a group. We were contractors, but we formed a group of contractors who tried to address these sort of centralization issues, and we basically came up with a panel. Everybody, all the large players had a person on the panel, and they could vote and decide how all that stuff was handled. But so that way, I don't know. That is probably worth writing down.
Well, you guys are all doing your part to help decentralize. So kudos to you there. So I want to ask another question regarding separating profitable farms and unprofitable farms in today's environment. It's it's pretty easy to be a profitable mining operation, seeing as where Bitcoin's at today. But in general, what are, in your eyes, what are the most important components of a profitable farm that really separate it from its competitors? Is it the mining hardware? Is it the power, capital, the flexible lenders behind the deal? There's a number of components behind each farm, and to me, it's trifecta between the team, the power, and the miners that we're using. So, would love to hear from you guys. Specifically Chase, what have you seen as the biggest differentiators between profitable and successful operations versus not?
For sure. Well, I've been fortunate or unfortunate enough to see both sides. When I first started mining back in 2016, my electricity rate was not so good, and that was great. When Bitcoin was running up to 20K in 2017, I thought I was a genius, and then it wasn't. I wasn't feeling so much like a genius anymore. But anyway, so for a mining operator, we operate under the philosophy of being like the lowest cost producer. So that starts typically with your electricity cost, right? So your all-in delivered electricity cost, if you can get that to be as low as possible, that's fantastic. Depending on your size, I would say aim for 3 cents and under. You should probably be very competitive, around those rates. There are some very clever things you can do, like out in West Texas, with flare gas and stranded gas and things like that. Even some of the like peaker plants, on the pipelines and whatnot, you can sometimes partner with them, and they're interested. And then aside from like your electricity costs, so your overall OpEx, right? So your operating costs, how much does it cost for you to produce a single Bitcoin? That's one of the metrics that we monitor like heavily. And so, how many folks do you have to have on your staff to perform maintenance tasks, to keep the miners hashing, to deal with the APIs and the network? And there's so many things that go into operations that's why we have a decent size team of folks here. But I'm actually in our job trailer on site this week. That's why I have this background instead. But so energy cost, operating cost. You brought up an interesting one about basically the cost of capital, right? So what does it look like to you? Is that debt? Is that equity? I don't know. In the beginning, starting out, I would say that equity was probably the safer route for us to go, because it's aligns incentives and gets everybody kind of on board, on the same page, same team, etc. But as the organizations grow in size, debt suddenly starts to look like a really good option, because it's with the way the Bitcoin mining is going right now, the interest rates on that debt can be pretty high, comparative like to a normal debt deal that you would see for any other market sector, and still you can outpace that no problem. Will that always be the case? I don't know. Depends on what happens with network hash rate and Bitcoin price. But last thing I'll say, I know, sorry I talked for a minute, is I liken what's going on right now with the Bitcoin bull run that we're seeing with the oil and gas industry a lot. And that's when the oil price is crushing, and there's a whole bunch of new companies that come out, and they're a bunch of cowboys, and they don't run a lean, mean operation. They're making tons of money, and they're buying houses and jets and flying their employees everywhere and being silly. But then the bust comes. So you get your boom times and your bust times, and what separates a good miner from a miner who's just in it to try to make a quick buck and then get out is how tight do you run your ship, and can you be profitable in boom times and in bust? So
thank you. Scott, Whit, do you guys want to comment on that?
Yeah, sure. I mean, I echo everything that Chase just said there. And in addition to it, I mean, I think the biggest thing to add is timing. Like, The number of people that have called me up in the last month being like, hey, I want to do a farm, and I got $500,000, $1 million, $5 million that they want to throw at it. I'm like, cool, call me in 6 months or something. It's just, there's certain times when you can get in, and it's when everybody was buying when it was down at $3,000. I think that's the time to do it. You can still, it's not saying it's impossible, but it's a hell of a lot harder to do it right now. And having the mindset that you're in it for the long run, and not just because Bitcoin's at 60K or it was at 20K back in 2017, those aren't reasons to get into it. You're into it because for the long haul. The same reason we've been producing containers nonstop all the way since 2017. We never stop. We get busier when the price goes up, but guys are still ordering constantly, even when it was down at 2,900 last year. It's about knowing that the market, at least having faith that the market's going to continue to go up or at least stay profitable, and getting into it at those times when not everybody and their uncle's trying to get into it.
Of course.
Yeah, all very valuable points. I think that, mining it's a low time preference game, right? If you're getting into it and you're looking for something that's going to be a quick hit, this is not the way to go. With us, when we're dealing, especially with newer newer miners, people who are new to mining altogether, it's very much like what Scott said. People just, they want to come in and they want to deploy all their capital all at once. And it's really something where you've got to crawl, walk, run, right? If you're just getting into mining, there is a lot on the technical side that you need to figure out before you should consider deploying a massive amount of capital. And just like with anything, you should probably not deploy all of your capital all at once ever into anything, right? Like you need to make sure that you're getting in slowly, understanding fully the commitment that you're undertaking, and learning as you go. Because like when Chase talks, it's you got to listen, right? The guy's had a ton of experience. He's built massive mining facilities, and one of the lessons that I've learned from watching miners like Chase and others who continue to grow is they're always scaling, right? There's not a time when you're like, okay, I'm just going to coast for 6 months. I'm just going to coast for a year. So you have to make sure that you're always looking at how I can continue to ramp up operations to scale my business, because that's really what mining is, right? You have to continue to outpace difficulty and hash rate if you want to maintain the same level of profitability or increase it. So it's just very important to take that approach getting in. I'm sure there's a lot of people right now that want to buy Bitcoin now that we're closer to 60K. Would have been better to buy at 3,500 for sure. But does that mean you shouldn't buy Bitcoin altogether? No, I mean, hey, get some exposure, but save some funds for a rainy day in case there's that dip and you can buy more.
100% agree with that. So this ties into something else. I think it's the perfect time to ask. So I talked with a lot of investors, a lot of friends, some friends messaging me now saying, hey, I want to get into mining, or, investors wanting to buy Bitcoin or, invest into a mining farm. What would you recommend to an investor that is coming to you today with, say, $1 million, $2 million, $3 million, and they're looking to buying Bitcoin? Would you sway them to invest into a mining operation, or would you sway them to actually buy outright? What are those key pieces of that differentiate the two different investors for you?
I guess I'll take a crack at this first. I have a hard time telling anybody to go buy miners at the price they're at right now. Like when I say a hard time, I say don't. That said, a lot of our clients will, go maybe a hosting route, right? And you're still getting exposure to it, and you've got the infrastructure in place. And then at a time when miners become affordable, or not that it's a good scenario, but frankly, when some people spent too much money on their miners and they default and you end up owning them, now you've positioned yourself there. There's other ways to get into mining rather than going and buying a $12,000 S19. And at the end of the day, it's kind of a derivative product for owning or buying Bitcoin. You still have this underlying asset. You have a little bit of bottom side protection, depending on, so long as you check the other boxes that Chase was alluding to earlier in terms of, having the right team in place, having low OpEx, making sure your power price is right. That's more the direction that I've been pushing people to, rather than buying mining equipment at the price it's at right now.
Yeah, especially when, they're like, hey, I want to buy one of these machines and I'm going to run it off the 240 that I have running to my dryer, and you're like, dude, there's no way. if residential price, you'll never ROI ever. Now, that being said, if you're just doing it as, like a case study because you want to learn more about mining, all right, cool. But then again, you don't have to go buy like the newest miner that's out there, right? If anything, I would say you should go buy an old generation miner like an S9 that's been hacked to a million pieces, and you can actually go like learn the file system, learn how everything works, because it's not locked out yet, right? So I tell most people, whenever they want to get involved in Bitcoin, is personal philosophy is everybody should own one, at least one, right? Because if you do the math on it, if you're doing the Kool-Aid like I do, I think Bitcoin will eventually be 350,000 ish, or so in the next like two years or so. So this is not financial advice. Don't listen to me.
Timestamp it.
Yeah. But anyway, so I tell everyone I think you should at least own one, right? Because I think that single coin will be worth millions of dollars someday. Now, if they want to get involved with mining, most people have a computer that can do mining to some extent. And I tell them, hey, go download something that you can run, Ethereum on. If you don't have a GPU that you can do that with right now, like you have a Intel Iris processor or something, go pick up a cheap, NVIDIA 1060 or something. Not one of the newest ones you can't get. Like you can't get a 3080 or 3090 right now. But now is a really difficult time. I agree with what Scott's saying to recommend to anybody to go and buy an ASIC miner. But I wouldn't do it.
Well, so now as the guy who sells ASIC miners to new people getting into the space,
I'll just let myself out. Sorry.
I do have a bit of a contrarian opinion, but the mindset is aligned, right? Like for us and our team, we're very big on helping people to be smart with the way that they're deploying capital. Most of the people who are coming to Compass and want to get started mining, they already own Bitcoin, and they're coming because they want to figure out mining. They now know that it's available to them. It used to be you had to have a considerable amount of hardware or capital to be able to host at a good facility around the country. Now you can do that with one machine in some places. And we see that it's most people, it's just a learning experience right now. They're getting a feel for it. They're understanding what's going on, learning market timing and the cycles, and preparing capital for when there is that market turn, they're able to get more equipment at cheaper rates. And that's really the opportunity right now. Maybe we're still on the way up. Maybe we're at the top. Maybe we're on the way down. Nobody is really going to be able to accurately predict that. But getting some exposure at whatever stage of the market we're at is always going to be beneficial, right? You can always double down if it dips, and if it goes up and it runs and these ASICs become $20,000 or $25,000 a pop, at least you were able to start your operation when they were, 10 to 12,000.
I agree with that. I'm always a fan of the dollar cost averaging model, and just to say my opinion on that, I love mining because in a way your dollar cost averaging into Bitcoin with a lump sum investment up front, they will recoup over time. But it's one of the most interesting ways to invest into Bitcoin directly. So I think Zach is giving us the 5-minute warning here. So I just have a few more questions for you guys.
Mostafa, just please your last question. I have
last question. All right, great. So last question, we'll allow you guys to kind of talk a little bit more about what you do specifically. How's your company doing things differently versus others in the market? What are you innovating? Some of you are building things that no one else has. How are you kind of operationally different than the remaining players out there?
I guess I'll go first here. So, with Compass Mining, when we set out to launch, really the idea is that we believe that the most important people to the Bitcoin ecosystem are Bitcoin miners, and our ethos is to treat them as they deserve to be treated, right? These are the people supporting everything that happens on Bitcoin, layer 1, layer 2, all of it. It all starts with the miners. And we want to make sure that they're treated with the service and the support that they deserve. We also are catering towards the new market entrants that want to get educated. They need someone to help them understand how to get a miner set up, what's important when it comes to selecting a hosting facility, How do you set up your pool? How do you connect your wallet? All of that fun stuff. And we enjoy it, right? That's a big part of our day is we enjoy getting in there and getting on the chats and engaging with people and helping them to go from, getting off of zero to scaling a mining operation.
Thank you. Scott?
So my internet cut out there, but I think I heard most of your question. I guess one of our biggest differentiating factors is our level of vertical integration, and the way it allows us to go from prototype to finished product quite as rapidly. So I mean, we have a complete in-house metal shop. We just recently added a new lab for developing our own PCBs for our smart automation in-house software team. Just very excited that we just purchased pick and place equipment so we can actually do automated placement of integrated circuits onto whether it be a hash board or onto our custom boards. But having all of that in-house really allows us to innovate and bring new products to market in an incredibly rapid fashion. Stuff that used to take 6 months can literally be done in a week.
Yeah, that was cool, Scott. I saw that video on Telegram. That was a cool test. It's hard for me to say, what we're doing differently than our competitors, because mining is typically, we're technically competitors. Even though we're friendly with a bunch of the other miners out there. I could say I might be able to generalize though. I'm not so sure, but so our team is really important to us. So like when we go through the hiring process, it's pretty rigorous. We don't take the first candidate for any position. We go through a lot of different interviews, and it goes through several different levels of the management team, and then we actually bring them down and we work with them for a couple days before we even consider like actually hiring them. And so the team that we have, it's very tight. It's like a big family, basically, and that's something from I learned in my previous life at our previous company. It was pretty good size. It was about 1,000+ employees. Kind of changed if there was disasters or whatnot, but it's hard to keep a team that large like a family. But I did get to see it grow over time and how it's kind of started to be less pleasurable to work there. So we want to try to make sure that we onboard folks and bring them into the family that are going to mesh well. And then, on top of that, I kind of alluded to it earlier. As additional capital is coming into the space, you can not have to do like super budget infrastructure builds. You can do some fancier things, to run a lower operating cost business. Sure, you might take a little additional capex up front, but capital's cheap these days, it seems. So money printer go burr, right? So
thank you, Chase.
Thank you, gentlemen. It's been a pleasure. And for anybody that has questions, feel free to shoot me an email at mustafa@gda.capital, and I'll direct you to one of these panelists. Gentlemen, appreciate your time and thank you for joining us.
Thanks.
Yeah, thank you so much for the perspective, you guys. I think I speak on behalf of all the attendees. Really great insights into the mining industry as a whole. So thank you so much.